Welcome to Real Estate in the Lowcountry. I am with Will Topping. He is with our friends at Goosehead Insurance. Welcome, Will. It's very nice to see you. It's my first chance to meet you and your first time being on the show, so welcome. Good to see you.
Thank you. Good to see you too.
Yeah, so before we jump into the meat of what we're going to talk about today, give us a little bit about your background.
Yeah, so I was born and raised on Hilton Head Island, and I graduated high school back in December of 22. And didn't really know what I wanted to do and found insurance as an option, and I jumped into it back in October of 23 and have been doing it ever since.
Wow. Okay, so a true local.
A true local.
Love that. And so today we're going to kind of kick off what's going to be I think a multi-part series, over the next few times that you guys are here. But you're our lead today, and we're going to do the anatomy of an insurance policy. So because I think people really, they don't know. Well, I'm speaking from myself, and I guess I'm thinking that maybe I'm the majority of the people out there don't know all the ins and outs of it. So we're going to get to the nitty gritty. So today you're going to start off talking about the dwelling part of the insurance, because that's really the main part. So kick us off. What are we going to talk about?
Yeah, so the dwelling coverage is going to be the biggest number you're going to see on your homeowner's policy. And it's the most important number you're going to see on your homeowner's policy for two reasons. It's the cost to replace your house in the event of a total loss, so it needs to be right. And it's also what the other coverages are based off of. The other coverages are percentages of that dwelling coverage.
And so how do we get to the correct dwelling number? Because obviously, this is where your expertise comes in, of course. But as a layperson, I would have really no idea what that means, because there's a big difference between replacement cost and market value. There's a lot of things that go into that.
Exactly. We use replacement cost estimators, so we plug square footage, bathrooms, bedrooms, what your house is made out of, all that fun stuff into it, and it gives us a roundabout number. And then we also use a little bit of local knowledge and really make sure that you are properly covered. And then we plug that into the homeowner's policy. But I like to think back to COVID, when wood prices and material prices in general skyrocketed, right, and stuff like that. Things you can't predict happened. We also add a 25% additional coverage, additional dwelling coverage endorsement on there. So I like to think on $1 million dwelling coverage, it's basically $250,000 in extra coverage. So you're really insured to $1.25 million.
Okay.
And it's not expensive to add that at all. So it's always a great add-on.
Yeah, and it's just that little cushion if something like COVID, or we talked about before we started filming too, Matthew, of course we live here.
Yeah.
Hurricane season's about to start. We're less than a month away. So those kinds of things can happen. And what else about our area makes that little cushion even more important?
Yeah, you have, the storm seasons that roll through. It's just super unpredictable. And then as we discussed with Matthew, God forbid a storm like that hits again.
Right.
Contractors were so flooded with business that, they were able to basically charge whatever they wanted.
Right.
So that 25% cushion was really important during that time.
Absolutely. And so talk to us, we have a little over a minute left, just kind of touch a little bit on the points. I'm sure we'll get into them in more detail in other segments, but the things underneath the dwelling that kind of are a percentage of that dwelling. What are we looking at there?
Yeah, so on $1 million dwelling, you have your other structures, which are going to be the detached structures, so pools, driveways, fences, that type of stuff. Okay. Usually they're between 10 and 20% of your coverage your dwelling coverage. And then next up you have your personal property, that's between 50 and 40% of that dwelling coverage. And finally you have your loss of use, which is, in the event of a covered loss, that loss of use is used to go rent out a new space, apartment, whatever the case is.
Right.
So, the percentages, again, are all based on that dwelling coverage.
And again, it's so important to have that loss of use in there. I think people don't think, I think most people think, oh, I'm going to have a homeowner's claim. It's going to be this little thing that they're redoing something in my kitchen, or they're redoing something in my bathroom. But it could be that they're redoing something, your whole house could be a loss, so you really have to go somewhere else. So that's an important piece.
Yeah, I know personal level, my aunt lives on Hilton Head, and after Matthew, she had to move out for about 6 months.
Wow.
So, if she was coming out of pocket for that, that would not have been good.
No, that would have been really scary.
Exactly.
Really scary. Well, thank you for kicking us off, our lead in the anatomy of an insurance policy. I can't wait to hear more about it. It always interests me because you think of insurance and people would most times think it's kind of boring, but it really is pretty fascinating.
It is.
Yeah, thank you for sharing with us today, Will.
Thank you for having me.